Well, welcome to another episode of Three Things in 3 Minutes. My name is Damon King. I'm a certified financial planner professional, a licensed investment advisor, and licensed insurance professional with Chapelwood Financial Services. I also serve as the lead instructor for the Rocky Retirement Financial Enrichment Series at Francis Tuttle Technology Center and the Metropolitan Library System in Oklahoma City. Well, right now we are dealing with a lot of changes to our federal government in the way of health insurance, trade, all kinds of things related to President Trump's proposed policies. One of the areas that he proposes making massive changes is to the tax code. And so we want to highlight today 3 opportunities that could present themselves should President Trump get his tax proposals pushed through. The first one has to deal with capital gains taxes, specifically the lowering of capital gains taxes. If you want to transfer assets from a taxable account, let's say you own some mutual funds inside of a brokerage account, and you want to move those assets from one place to another, whether it's to another investment firm, or maybe you want to stick them into a guarantee of principal account like a fixed or fixed index annuity. Before you can roll those over, let's say the assets don't transfer over. You have to liquidate the assets first. When you liquidate, if you have any embedded capital gains, you will pay taxes on those capital gains before the money is transferred, or at least by the end of the year you have to pay those. But if the capital gains rate is lowered, well, it makes this decision a little easier. You don't have to pay as much tax on capital gains. So it presents an opportunity to roll money over from, say, an investment account to one that's a little more protected, like an annuity. That's one opportunity. The second one has to do with the corporate tax rate. Right now, C corporations that buy and sell stock, or that sell stock to us as investors, have a top tax rate of 35%. President Trump proposes to reduce that to 15%. This can make some major opportunities available for those that own a small business. Let's say you own a small business like an LLC, a limited liability corporation. The taxes on that LLC's earnings are not at the corporate tax rate, they're at your personal income tax rate. And let's say you're in the 25% bracket. Right now, you enjoy a 10% reduction in taxes. If you were a C corporation, you'd pay 35%. Right now, you pay 25%. But if that C corporation tax rate goes down to 15%, it might make it in your best interest to go ahead and incorporate fully. So now you have a 15% tax rate on your corporation's earnings as opposed to your personal income tax rate. And the third opportunity that exists is with the estate tax. President Trump wants to completely repeal the estate tax, which right now is around 40%. He wants to replace it with paying capital gains taxes on assets that you transfer to your heirs at your death, any appreciated assets. Right now, the top capital gains rate is about 20%. So you would get a 20% reduction potentially in your estate taxes. And again, that capital gains rate would only come into effect if your estate was over a certain value. So there are some opportunities that may present themselves if President Trump gets his tax proposals through. It remains to be seen if that's going to happen. But if they do, just keep those opportunities in mind. Thanks again so much for watching 3 Things in 3 Minutes today. If you have a comment or if you would like to make a suggestion for a future broadcast, please leave it down in the comments section there. Give us a like, give us a share. And thanks so much for watching. We'll see you next time.